rising tide in the markets have been lifting stocks higher this year, but with valuation concerns around some of those high-flying AI names, they're putting some jitters into the markets. Are there still any sectors that look undervalued? Joining us now to discuss, David Sekera, Chief U.S. Market Strategist with Morningstar Research. David, great to have you back on the program.
Hey, Greg, good to see you again.
Let's start with those valuations. Seems to be the big concern for investors right now, trying to wrap their heads around it. Morningstar, I know they do fair value. We talked about when you're on the program, changing their view on some of the big tech names.
Well, I too am trying to wrap my head around some of these numbers as well. Just the numbers we're talking about are just astronomical. So, for example, in just October, we increased our fair value on 170 different stocks under our coverage. Our increases well outpaced our decreases by over a 3-to-1 ratio. And in fact, those valuation increases on the 6 largest stocks that we increased our fair values was $3.1 trillion worth of market cap. Just to put that in perspective, think about it. That's equal to adding 31 $100 billion companies, to the total market valuation. And in the U.S., there's only 140 companies in the U.S. market index with a market cap of over $100 billion. So our biggest increase was on Alphabet. In fact, we increased our fair value twice on Google, over the course of the month. First was after they announced their partnership with Anthropic, and then second after earnings came in better than what we expected. The total increase in market cap on Alphabet was 1.2 trillion. Now, to put that in perspective, that's larger than the entire market cap of Warren Buffett's Berkshire Hathaway, which in and of itself is the 10th largest in the index. We also increased our fair value on Nvidia by $800 billion. That was after the CEO, disclosed that they had over $500 billion worth of cumulative sales here in the end of calendar year 2025 and into 2026. That increase there, that's like adding the entire market capitalization of Walmart to the market index. So over the course of October, we had a total market increase of our valuations by $4.2 trillion. And to some degree, it doesn't even look like it's over yet. We actually just increased our fair value on AMD yesterday following their investor meeting as we incorporated much higher revenue guidance into our financial model.
When you start to recalculate these valuations, what you consider to be fair value, is this catching up to the reality of the stock's moves already, or do we still think there could be some more room to run in the space?
Well, there's a couple of different things going on. So as far as whether or not there's still more room to run, that's going to be very idiosyncratic on each of the individual stocks. Now, the market perspective overall, I don't know, it still feels like momentum wants to keep us moving higher. The market, according to a composite of our fair values, is still a couple percent undervalued. And I think Wall Street just wants to close out a very strong year with some very strong gains. Longer term, I think investors really need to prepare themselves that from here, I think returns will be much closer to historically normalized types of returns, essentially a blended cost of equity over time. I think in 2026, be ready for bouts of volatility similar to what we saw at the beginning of 2025. Just considering how much of a growth story all of these stocks are, considering that we are, at pretty high valuations based on our growth expectations. Any type of negative headlines that could cause any doubt in the AI growth story, could certainly, put a lot of pressure on stocks, in the short term. But like I said, from an individual stock perspective, when we're looking at these big and mega caps, those that we think are most closely tied to not only the AI build-out boom, but also have very strong underlying fundamental businesses still look attractive, such as Microsoft and Alphabet. Some of the other ones where they're tied to AI, but the valuations in our mind already kind of incorporate our growth or our base case for growth. Nvidia, Amazon, Broadcom are all still pretty fairly valued, whereas a stock like Apple, we still think it's overvalued. When we look at the growth trajectory, the company not necessarily really having a significant AI product out there yet, that's one that we think is probably shot too much to the upside.
When you talk about potential for volatility, I've been having conversations saying that the market concentration, which we've been concerned about for a while, which obviously this is an issue that's not going away, it's probably only even getting more concentrated, could mean even more volatile times ahead. What is happening out there with market concentration?
Exactly. I mean, just with all of these fair value increases and the market, rallying on these stocks, the big just keep getting bigger, and the concentration just continues to keep getting more and more concentrated. So with those mega cap stocks, moving higher, larger percentage of the market. If you look at the top 10 stocks in the Morningstar U.S. Market Index, they're almost 40% of the total market capitalization. And when you look at those 10 stocks, 8 of them are all tied to AI. And just to put some of this into perspective, if you look at Nvidia back in 2020, that was only about 1% of the market capitalization. Now that's up to 7%, in and of itself. So I just have to remind investors, even if you think you're pretty broadly diversified, you have a substantial amount of exposure in indices, which are very broad market indices, you're still heavily exposed to AI-driven returns. It's been great for the upside, the past, couple of years. But as you noted, I do think it increases some of that downside risk if we have a sell-off in AI. So if you're an investor and you're looking to reduce that concentration risk, or maybe you just have the lack of appetite for investing in AI at this point, yeah, I would recommend looking into, diversifying into maybe the value space. Also look at small cap stocks. Both of those are areas where we see, a lot of attractive opportunities which are trading at discounts to our fair values, but they also have minimal exposure to artificial intelligence.
Okay, so yeah, interesting, obviously, to take a look at other parts of the market that aren't getting a lot of attention right now. When it comes to the AI trade, I believe you're saying that next year we could see a pivot into people who've been building right now the AI infrastructure, but we're waiting for people to show us how they can utilize it.
Exactly. And I think we'd even talked about this a couple of months ago. I thought that focus would have already shifted by now. But this year, it's still been all about the AI arms race, all about the build out boom. Specifically just looking at the amount of growth that we've seen in hardware, data centers, and utilities. But at some point, someone's got to be able to pay for all of this CapEx. And in order to do that, you need to have new economic value created by artificial intelligence. You need to have companies that will improve, their existing products and services, companies that can develop new use cases and drive efficiency gains in order to be able to pay for, these, not even tens of billions, but hundreds of billions of dollars worth of CapEx, being spent over the next couple of years. So I think next year we're going to see much more focus identifying those companies that will benefit most from AI. Some of the individual areas, that we're scouring and looking for these opportunities are in the software and services. I think that's the easiest area to see where AI can make those improvements. Seeing opportunities in healthcare and life sciences, research and development. I think the financial services industry will be able to use artificial intelligence to make some very large efficiency gains. E-commerce and social media already using AI. And then other areas, even like transportation and logistics, I think will be long-term beneficiaries.